If you're looking for an awesome product at a great price, be sure to check out the link in the description. Australia was promised billions, yet it seems not a single cent has been paid in company tax. This is the story of Adani's Carmichael mine, a project that has raised questions about missed revenue and the intricate dealings of a multinational corporation. The promise was substantial: a sprawling coal mine in Queensland, poised to unlock the untapped resources of the Galilee Basin. It was a promise of jobs, economic prosperity, and billions in tax revenue for the state and federal governments. Rewind to 2010, when the climate wars were escalating in Canberra. Adani, an Indian conglomerate, proposed a massive coal mine capable of extracting up to 60 million tons of coal per year for 150 years, making it one of the world's largest. The alluring prospect of over 10,000 jobs, coupled with a pledge of $22 billion in taxes and royalties, became the project's rallying cry, appearing even in the company's advertisements. The economic promises were significant. The then head of Adani Mining, Jayakumar Janakaraj, assured the Australian operations would deliver $22 billion in taxes and royalties to be invested right back into frontline services. This pledge was embraced by both state and federal governments, each needing to issue crucial approvals. But the project also faced significant opposition from environmental groups, who highlighted the colossal carbon footprint of the mine, projected to release 4.7 billion tons of CO2 equivalent over its lifetime. The battle between environmentalists and the coal miner split communities. In 2015, as conservationists challenged the project in the Queensland Land Court, the narrative began to shift. The initial job projections, deemed unsustainable, were revised. The anticipated annual coal output was scaled back, and the promised number of jobs fell to less than 1,500. Despite the adjustments, the projected corporate tax take remained seemingly strong. However, experts were quick to point out that Adani's modeling did not fully account for tax minimization strategies. By 2017, Adani's pursuit of a subsidized loan had faltered, and global banks were showing reluctance to fund the project. However, the mine's supporters, led by industry groups, doubled down, urging policymakers to back the project. The Minerals Council of Australia, in 2018, emphasized the potential for thousands of regional jobs and billions in tax revenue to fund essential services. Adani opted to finance the project itself, albeit on a reduced scale. After assembling its first shipment of thermal coal, Adani claimed its export program contributed to sustainable energy. However, many experts disputed this. The Indian conglomerate timed the project well. In late 2021, energy commodity prices began to surge, fueled by rising tensions between Russia and Ukraine. Then, after the Russian invasion in early 2022, coal prices soared to record highs. Despite these advantages, the mine's financial performance has been less than anticipated. In its initial months of operation, the mine generated over $32.5 million in revenue, but it recorded an operating loss, resulting in zero tax payable. This pattern has continued, even as revenue has increased. In 2025, revenue reached $1.27 billion, yet the company again recorded a paper loss, due to transactions and interest payments. Financial analysts have described Adani's corporate structure as complex and opaque. The volume of related party transactions is unprecedented, with analysts observing that it appears set up to avoid paying tax. Royalties have been paid, amounting to $78.6 million in 2025 and $83.5 million in 2024. Currently, the mine lists only 84 direct employees, using a mining services provider for additional workers. A spokesperson for Adani's Australian mining business, branded Bravus Mining and Resources, stated that Adani had invested over $2.5 billion in the Australian economy and currently employed over 1,200 Queenslanders. They emphasized that the coal from the Carmichael mine is used by developing nations in the Asia-Pacific region to provide reliable and affordable energy. However, frustration has been voiced by many politicians. Independent Senator David Pocock questioned why multinational corporations were allowed to profit from Australian resources without paying taxes. Independent MP Zali Steggall called Adani a cautionary tale, urging reform of the approvals process to hold miners accountable for their promises. She said that companies often overstate project benefits that vanish once operations begin, particularly in the case of foreign-owned corporations.